It's terrifying to me to watch it because of you're talking about these fanciful notions are really gaining
Yeah.
traction.
It's the boomer generation that is going to be the trigger for this, because they're the guys owed all the money. Until the millennials, they were the biggest generation that the world had ever seen. But the boomers are also the ones in power at the moment. We have this situation where you have the millennials. I spoke with Neil Howe about this recently, and he said, the Gen X generation basically skipped politics. They basically didn't take an interest in it. So you have this tug of war for power in politics with AOC and these young Democrats coming through with all these ideas, which, whilst to you and I are fanciful and our decades of experiences tell us that it won't work, they don't know any better. Their entire lives, they've been witness to the state, we'll use that pejorative term, but the state funding everything and printing money, and everything's been fine. So you can totally see how they think that this is the solution.
Right.
But I just wonder how that resolves itself, not so much from the money point of view, but from this battle between the guys who have power and who are essentially voting on whether to pay themselves an annuity, and the people coming through are going to say, no, Grandpa, that's not going to fly.
Right.
How do you see that battle playing out?
Wow. I mean, it's terrifying to me to watch it because of you're talking about these fanciful notions are really gaining traction in a way that, had you mentioned MMT as a serious proposal a year ago, I wouldn't even,
Right? Yeah, I thought it was a cage match.
Break,
I mean, I had no idea.
Why are we even wasting the breath talking about this? Because there's no chance anyone would do something so asinine, right?
Except maybe Japan.
Right. Well, but so that's interesting because that's always held up as the example of, see, it can work. And it's the perfect crime. No one loses. It's what could go wrong. Well, there happen to be some pretty important differences between the U.S. economy and Japan. And the most obvious to me is that they're internally financed. They don't rely on the rest of the world to finance themselves. So as we sit here running dollar bills off the printing press, or China, Japan, and Russia, and all these people are going to say, oh, yeah, that's good by us. No problem.
Right.
You can, completely inflate away all the obligations that, you owe us. So it's very difficult for me to wrap my head around it and see how it plays out. But I will confess to being scared at how much traction it's gaining and that I really need to start to figure out how this could possibly happen. Because, talking about how this is a long-term problem that we might have the luxury of not addressing right away, I think the catalyst for this whole pension crisis becoming immediate is going to be the bursting of the corporate debt bubble. Because obviously, if you can't make 8% in a 0% risk-free world, you've got to load up on all of the most toxic claims you can out there. So we know that the pensions have massive exposure to this corporate debt bubble. And, it wouldn't take much of an increase in rates to really wreak havoc in that corporate market. I mean, I think there's an appreciation now about the increasingly low quality of corporate debt, even in the investment grade sphere, where half of the investment grade debt now is one rung above. I like to call it pre-junk.
Pre-junk.
And then, of course, you've got another 1.2 trillion in actual junk, and then you've got 1.2 trillion in levered loans with no covenants. So you've got about $5 trillion in corporate debt of the 9.5 trillion out there, so more than half of it, that's really vulnerable to any increase in rates. And we're going to really find out who can withstand an increase in rates because we've got almost 800 billion of that debt rolling this year. And another 900 billion next year. So there's no relief in sight. It's not like, if they can just make it to the end of this year, everything's all clear.
We're home free.
So this is really going to be a an issue, I think, moving forward. It'll be interesting to see how it unfolds over the course of the year. But it will certainly reveal the degree to which the averages that everyone looks at in terms of the health of the corporate sector, in terms of corporate profits, really don't tell you anything.
Yeah.
It's so much like the consumer, where you've got the top that have all the assets and none of the debt, and then you've got the bottom that obviously are in the reverse situation. And frankly, I think the numbers in the corporate sector are even more dramatic than they are in the consumer side. I was just looking at with the fourth quarter numbers for S&P earnings, the top 20% of companies accounted for 75% of the earnings.
Right.
That's in the S&P 500. Those
Yeah.
are the largest 500 companies out there. If you looked at those government profit numbers that I like to look at, it's the skew is even more
Sure.
dramatic, obviously. And then when you look at cash positions, it's even more profound. The top 20% have 80% of the cash. In fact, if you add up the cash of the top 3 companies in the S&P, the biggest cash holders, they have more cash than the bottom 450 companies.
Is that
Just
right?
3 companies. So, I mean, it's remarkable, the complacency around the corporate sector's ability to service all of this debt, because really, outside those top 20%, there is no ability
Right,
to
right.
service any increase in there is no ability to withstand any increase in debt service. And who knows if they can even handle what they've got already,
Sure.
depending on what happens with economic activity and where that profit growth number actually goes this year.